again, once we get some certainty and we get more knowledge about where things are going to go, that's when all the speculation starts lining up. That's when the markets start balancing out. That's when the interest rates start coming back in normal, because we have an idea of what's going on. Right now, there is no idea of what's going on.
All right, guys, welcome back to Keaty Real Estate, and I'm here with one of my really good friends and one of our mortgage brokers. We've got Kevin Jones with GMFS Mortgage.
What's up, guys? Hey, everybody.
Kevin?
Jim, Bo Bump.
Thank you for stopping by, man. I really appreciate it.
Anytime. I really thought about it, but they were hot in my garage. I was going to bring a couple of ice cold Coronas, put them right here to really enjoy this podcast.
Well, why don't we do another one on Friday afternoon?
Friday, Corona Day.
Yeah, Corona Day.
Corona Day.
So, man, thank you for stopping by.
You're welcome. Thanks for having me.
Really strange times, but I know that you're really busy.
Yeah, it's weird. So I'm trying to figure out the safest, most political way to say this is that, in my opinion, I feel like there's a little more of a panic than there should be. But at the same time, this is something new. There's our generation, a generation before us, and a generation above us that they've never dealt with this stuff.
Right.
But on the other hand, things that were happening drop the markets, and in dropping the markets, drop interest rates. And so we had a very cool window to be able to grab these interest rates while they were really low, making us as loan officers, number one, as salespeople, it's our job to jump on and take advantage of an opportunity. If we have an opportunity to save people money, because I mean, let's be honest, we're putting people in debt, but we're using it as collateral, and the collateral is for a home, right? So it's the best debt you can get into. Dave Ramsey says so, right? So if we get his seal of approval, cool. We're doing good things, right? And so if we have the opportunity to lower somebody's monthly budget, why wouldn't we jump on it? And so a good loan officer,
raise their purchasing power.
Or raise their purchasing power.
I mean, that's why the
point on the realtor
government
side
enacts is to actually stimulate the economy, and the housing market is a big part of that. So
agreed.
We need to be available to take advantage of these low interest rates while they last.
Yeah, absolutely. And it's an interesting thing, and I noticed it was one of your questions on there that we're in 2020.
Hey, you're not supposed to see these.
Oh, my bad, man. I didn't see them. So we're in 2020 now. So do we really need to see a person face to face anymore? Almost no. Yeah. Especially on the loan side.
Well, before we get into that, let's talk about the interest rates. Where are the interest rates today?
Okay, so I'm not going to actually quote an interest rate on here, because then I got to give APR, I got to give all the fun stuff.
Yeah.
So let's pretend that the interest rates are somewhere around the 3.5 to 4 mark. And here's what I'm running into. So March 2nd, 3rd, and 4th of this month, obviously. So March 2nd, 3rd, and 4th, a couple weeks ago, we had that window open because, am I still on the mic, Tom? All right, cool. Because that's when the market started dropping. And that's also when the interest rates kept following the market as well. 5th and 6th is whenever the mortgage-backed securities.
March 5th and 6th?
March 5th and 6th, sorry. So March 5th and 6th is whenever basically the mortgage banks started taking a step away from what was going on with the stock market or the Dow and the 10-year Treasury notes, and basically the typical base that we look at everything. And I'm getting phone calls, and like even whenever we saw the Fed fund hit, whenever the Fed fund hit 0, my phone flooded with phone calls, and I had to give this explanation that basically mortgage banks have stepped away from what's going on the government side. Usually the government side dictates where things are going to go, and then the mortgage banks follow along with it. Now they're not. They're saying it's too volatile. We're going to take a step back. Some things are moving all over the place. Yesterday, there was actually a backwards trend in the market. As we all know, the Dow Jones dropped 2,000 points yesterday, and the Treasury yield went up 0.2 of a point. And that's not the way that it goes. It's the other way around. They usually drop together. So things were all over the place. And so that's basically what's going on now when it comes to the interest rates, is that we're just pulling clients in. They ask us where the interest rate's going to be, and I tell them that you got a range, and I'm not ready to really give you an interest rate right now. I will if they absolutely want to. And let's say that I had somebody floating to purchase a house and they're ready to close in a week. I got to lock them in.
Yeah.
And I got to lock them in at something.
Right. But we talked yesterday actually on the phone, and you had mentioned that some of the people you're saying, hey, let's get it all ready, and then let's float you until the right interest rates, because obviously I'm assuming you're predicting, or you think that the interest rates could potentially go down in the coming weeks.
Agreed. Yeah. So I love our private conversations. Now we busted out on the podcast. Yeah. I'm messing with you. So yeah, but I'm telling everybody that. So it's really not private. Most loan officers out there are going to tell everybody that too, is that the market and everything that's going on the government side is just, there's no way to speculate and understand what's going on.
Right.
We need more knowledge, right?
But it's low right now. And if you're
it's really not low right now. It's not as low as it was in the beginning of March. But to go along with what we were talking about yesterday, I'm basically taking the application in and I'm getting them locked and loaded, right? And then we discuss, if it's a refinance, what interest rate do you want, right? And so every day, that's all I'm doing is watching these rates and looking at them. If I can catch one at a rate that somebody wants, then cool, we're going to catch it. Right. Then I'm going to call them and we're going to talk about numbers and everything too. On the purchase side, if we've got somebody sending something in, Jim Keaty sends me a referral and they're closing April 15th, end of April, beginning of May, something like that. Cool. Hey guys, it's, in my opinion, we need to float this and we need to see what's going to happen, because again, once we get some certainty and we get more knowledge about where things are going to go, that's when all the speculation starts lining up. That's when the markets start balancing out. That's when the interest rates start coming back in normal, because we have an idea of what's going on. Right now, there is no idea of what's going on.
Right. Well, let's get back to, because you were saying that the interest rates are not low, but in general, when you look at in the year, we're way lower than we were starting the year.
Right.
Not way lower, but it went down to like 2.5 at one point.
Right.
And so that's
the rates are still low.
Rates are low, but you could potentially get something that's extremely low if you have the right timing. But would you say that it's better to be prepared for that, and so that you can jump versus like, oh yeah, it's low, now I'm going to call my mortgage or my bank, my mortgage guy, my bank, and then. So
here's a good point. So whenever we do an application, that's how I got to get somebody locked and loaded, right? Mm-hmm. So we do the application. Their credit report is good for 120 days, and I'm going to use the conventional loan for my example. Some other loan programs are a little different. Conventional loans, the credit report's good for 120 days. So we're going to get that credit report in, have everything ready to go, and catch that rate if we can catch it. So we've got that amount of time, right? And here's the thing. A lot of times people make the comment, I don't want my credit ran because it's going to hurt my score.
That was one of my questions. Is that a risk for somebody thinking about buying a house or refinance?
Yes and no. So let me give two full disclaimers. Number one, I'm never going to know where the rates are going to go. And if I did, I would have a crystal ball on an island with Michael Jackson, because we all know that dude's somewhere else, right? Number two, I'm not a credit counselor. So I'm going to give those full disclosures. But here's the thing. Whenever it comes to us pulling a credit report, to my knowledge and the history of what I've seen in pulling credit reports, if I'm pulling your credit report and another loan officer is pulling your credit report and maybe an insurance company has to do a soft pull to purchase a house, it makes sense. You're not freaking out the credit bureaus. Your credit score is based solely on risk, and that's all the credit bureaus look at. And so whenever we pull those reports, if it makes sense, the credit bureau may lower your score 1 or 2 points, but they shouldn't. And I've got to say they shouldn't. I can't guarantee anything, because we all know we have no control over what that other person's doing. I'll give you an example. Had a good friend who got his credit report pulled with another lender beginning of a month. He ended up not liking that lender. It just didn't jive. 3 weeks later, he came to me to buy the same house, to do the same thing. And I pulled his credit, and one of his cards ended up going up in its limit. And so that happened within 2.5 weeks. Well, my credit score was about 30 points lower than the other guy's credit score, because he basically maxed out his credit card. So that's the risk that you take.
But it had nothing to do with actually pulling.
Had nothing to do with me pulling the credit.
I think that's something that, and I've actually talked with credit repair companies, and and it's really nowadays the credit bureaus, they look at shopping for loans as good customer. Consumer.
Exactly. It's got to make sense. And it's the situations where people say, cool, I want to buy a house. And then they do a couple of mortgage things. Let's say there was some reason they couldn't buy the house. Then they turn around and say, you know what? I'm not buying a house anymore. I'm going to go shop for a car. And let's say they came in at 680 on their mortgage credit report. And then when they go shop for a car and they pull that credit, they're at 620 or 630.
Yeah.
It just doesn't make sense to the bureaus because the bureaus don't know what they're wanting to buy. So, okay, you're risky. We're going to drop your score.
When you're going into different types of industries,
You got
applying
it.
for credit cards and different things. But when you're
Right.
shopping for a home loan or a mortgage or refinancing, it shouldn't affect your credit
It shouldn't.
whatsoever. Let's move on. So,
All right.
interest rates are low, and you have
Yep.
no idea. You don't have a crystal ball, so you don't know
I
what
don't.
they're going to be. But knowing what we do know from past events,
Right.
when we have crisis and the economy's tanking,
Yep.
typically we see interest rates go down. What do you expect to see, knowing what we know from the past,
Okay.
when this crisis is behind us?
One of the other factors is the fact that in those few days, let's say right at the end of February, first few days of March, market was dropping. We did our jobs as mortgage lenders. We made the phone calls. We got everybody in, as many as we could, and we overloaded the pipeline, right? This isn't just at GMFS. This is nationwide,
Everywhere, sure.
everywhere. So you have the banks. So GMFS, we fund our own loans. Then you have Fannie Mae, Freddie Mac. Then you have the warehouse lenders. All of those guys have to get prepped to fund all of this stuff. So they're also setting where our rates are. So they're going to, number one, do a demand situation and say, wow, this influx is coming in. We need to slow it down because number two, we got to fund all this, right? So we got to fund it all. We got to take care of it all. Let's up the rates a little bit because we all know the best way to slow something down, make the price a little higher,
Yeah.
right? So they slowed everything down, but then you start running into market situations where it's so volatile, there's no way to figure out what's going on. So it's a double whammy. In my opinion, 2 to 4 weeks, we should see some stability because now we know what's going on a little bit more with COVID-19. People have been in an quarantine. And so we'll get more cases that have come back, more positives, know what's going on. People will get more of an idea. Number two, all of those loans are getting funded because I'm closing people next week. And I'm closing people next week from the beginning of the refinance boom, right? So if I'm closing them, I'm just the average loan officer that over communicates and does a really good job. So hopefully I'm the status quo for all loan officers out there. Everybody else should be funding sometime next week or the week after too.
Right.
So you kind of have a double situation. Number one, COVID was coming in. Number two, the influx of all these refinances coming in. Whoa, let's freak out. Let's raise the rates a little bit. Let's slow it down, right? So hopefully we have this new situation coming in where these loans are now getting funded and we have more information about what's going on with the COVID-19 situation.
And after this situation,
Yeah.
I want to get back to one of the things you said, but
Okay.
before I do, after we know this is behind us,
Yep.
and we're going to get through this,
Yep.
I would imagine the interest rates to normalize.
Agreed.
And
Yeah. And that's really, I gave you a long answer to an easy question. That's really what should happen. The next few weeks, everything should normalize and pan out and come back down to where we're all back in normal competition. And when I say normal competition, I'm talking about all the lenders.
Yeah.
Everybody that's taking care of mortgages should have the same normal interest rates, but they still should be pretty low.
So I want to go back to what you just said. I mean,
Okay.
you're closing deals next week.
Yep.
There's rumors out there that everything is shut down and that you're not going to be closing. The courthouse is done and title companies are shut down. I just want to clarify.
Yeah.
You're working.
Yep.
You're closing deals.
Yep.
Do you see anything at this point that's going to interrupt that?
Banks are sitting at a very good point. And I read an article earlier this morning. It was just by happenstance, wasn't even about anything coming in here and talking about funding loans. Everybody still needs to get paid, right? Title company, the only way they're getting paid is if the bank's funding the loan. Realtors, the only way they're getting paid, bank funds the loan. We have no reason to suspect that we're going to stop funding loans.
Yeah.
Before the whole COVID-19 situation, go look at where the shares are for the bigger banks, for Fannie Mae, Freddie Mac. Because Fannie Mae, Freddie Mac is sponsored by the government, but they're a private company. They're two separate private companies. So when it comes down to it, there's no reason that the banks should stop funding loans. Whenever they do, that's when everybody's really going to start shutting down.
Right.
But there's nothing in the forecast that the banks are going to stop funding.
That's right. No, I've heard the opposite, that they're going to stay open. Banks, you're going to have access to the money.
Yep.
We shouldn't have any problems there.
Well, we have two things, and let's be honest. Let's talk about basic necessities: cash, food, and a place to poo, right?
Yep.
So as long as you keep our electricity on, keep our water running, we got a place to poo. because that's when mass hysteria happens. Right. We got food coming in, so grocery stores shouldn't close. And this is all coming from common sense. Why close grocery stores, right? And then number 3, banks. We got to have our cash. Now, do some of us have a stockpile of cash at home? You might need to. You might have to go back to Ron Swanson days and say, I have an undisclosed amount of gold.
Doomsday preppers have
right? I have an undisclosed amount of
around their
gold.
Saying, hey, I've been telling you this for years.
Exactly.
Right.
And so it's always good to prepare yourself.
Right.
And just to have a little bit of something. Dave Ramsey keeps saying it, have your emergency fund. Right. You know what I mean? But when it comes to funding loans, I don't see any reason why banks should stop funding loans. They'll slow things down, like I said before, with the interest rates to maybe appease the situation, but they're always going to balance it out. The banks are a private sector too. They want to get stuff done. They want to make sure that they're still making profit. They want to make sure that they're getting their employees in.
The whole point of a stimulus package and being able to actually give money out, you got to have people to be able to give it.
You got it.
I would say that when they reduce the interest rates, they want us to be able to take advantage of it. That's the whole point.
Right.
And so, I think they use that's an essential business. So
agreed.
We have it's essential businesses and then non-essential businesses.
Right.
That there's an argument there. Bars, I would have thought those were essential, but apparently
South Louisiana, we give a crap about it. Everybody else does it.
Right. So anyway, this is really good information. So what about taking advantage of it? Because it seems like there could be a window here that if you've been thinking about buying a house or if you've been thinking about refinancing your house, this could absolutely be the time to do it if you're able to. Unfortunately, we know there's a lot of people that are not getting paid. A lot of the workers, the oil industry is, at $20 a barrel. They're not going to. They're letting people off. So we've experienced some people not being able to close because of that.
Right.
But if you're able to, this would be the time to potentially take care of it. Now, what you're saying is you can start that process. Is there any risk to starting the process and then stopping that process?
No, not at all. Not
You're
at all.
There's no in anything. Like if I had my parents or my sister and I'm like, hey Kevin, look, let's go ahead and start that application process in case we can take advantage of that window, that short window. Is there anything that's going to lock them into you?
Think about this.
Anybody else?
The only time you should feel locked into something is if you have to pay money for it. The only time that you really are locked in with us is when you got to pay for an appraisal, because that's $500 that you got to pay out of pocket. Other than that, we're pulling a credit report. That's on our expense because that costs. That's our expense. And then if we have to get your check stubs, that's free because it's coming from your business, and we got to get your bank statements. Nobody really pays the $2 for a bank statement anymore. They just get it online and send it to us. So the answer is no. You're not locked in if we're just sitting there pulling a credit report, looking at your numbers, and getting you ready to go for the next step.
I guess the advice would be if you're thinking about buying a house or if you're thinking about refinancing, go ahead, get with, call Kevin.
Let us know.
Let Kevin know. Right. Get that process started so that you can take advantage of it if you want to.
Right.
There's nothing that's going to lock you into it. And then when do you order the appraisal? Once you've locked in the interest rate and once they've purchased the house or at least got it in their contract?
It's really up to the comfort of the client too with our professional guidance, right? So when we're doing a refinance, all of that is based on the value of the home, period. So,
but I do want to point out, you have to go through a certain system to get the appraisal ordered. So don't go out and get your own appraisal.
Yeah, absolutely. Thanks for saying that. Do not order your own appraisal because we're probably not going to use it.
That's right.
Because we want to order our own appraisal. The order's got to come from us because it's a conflict of interest. We use John Doe's appraisal.
Mm-hmm. That's right.
That appraiser is getting the money from John Doe. It's a conflict of interest. This is John Doe's appraisal. We probably shouldn't be using it, and we probably can't use it. The reason we shouldn't be using it is because it wasn't ordered by us. It's considered a biased appraisal because the money came from John Doe. John Doe had the conversation with the appraiser.
That's right.
Who's to say that value is a little inflated? So we order the appraisal on our side. When it comes to timing with refinances, it's a conversation. The way that rates are going now, we might just get everything truly locked and loaded, get the appraisal done, get it in. And then once we get the appraisal in, okay, your numbers are good. Now we're just waiting to get the rate where it needs to be, right? Because the appraisals are good for 6 months. Mm-hmm. So we can hold on to that appraisal for that long. wait for the rates to get there, grab one, get you into the closing booth. Right.
So go ahead. I guess the advice here is, guys, get started on everything. It can't hurt, and you have everything to
Just
gain
call.
and nothing to lose.
That's the biggest thing. Just call and hear it from us. Everybody speculates and reads too much stuff on the internet. Just call the professional. It's literally free to
And
get
not
our
only
advice.
is it free, and my understanding is you don't even have to meet with them. You can do everything virtually.
I'm working from home right now. I'm not a fan of all this stuff. I don't want to give it to anybody. That's why Jim and I elbow bumped and everything. And he called me on Saturday and he said, "Hey, Kev, let's come do this podcast." I was like, "No, Jim, I'm at home with my kids. I don't feel like giving the coronavirus, right? Getting the coronavirus." And so, we're working from home. The money gets wired in from the
You can
bank
do the
side.
application, call the lender, do the application over the phone, then send in any paperwork. You can electronically send it all in.
Yep.
And then you do need to go to the title company to close the transaction.
Right. And I mean, the only thing that we're getting from the title companies is they don't want us there because they need essential people there. We're basically not non-essential people. Yeah, I'm going to call them after the closing or set myself aside that if there are any lending questions while we're at the closing, if for some reason I didn't go over that with them in the front end, which I do before every closing, I want to talk to them, go over everything so that when they go into that closing, there's a lot less anxiety, right? And so I make sure that I'm there to answer any questions in the closing, ready to go, but I'm not going to be there.
Yeah. Awesome, man. Thank you for being here today.
Welcome.
One more time, how can somebody get a hold of you?
337-254-1670 or look me up online, Kevin Jones, GMFS Mortgage.
Yeah, give them a call.
Easy peasy.
Just to summarize, there's no reason to wait. Go ahead and do it.
Yep.
We're open. They're open.
Yep.
The courthouse is still recording closings.
Yep.
And you can't really lose at this point.
So let's talk about COVID-19. What's your opinion on it?
Well,
or should I not be? Is this something that Tommy's going to cut?
My COVID-19 is, I believe that, I believe that it's a little bit, based on what I know and the numbers that I'm seeing,
right?
It's a little bit too early to decide like what really is going to happen.
Right.
I mean, if you look at China, Italy, Washington State, New York, they're all basically the same numbers as far as the population that's number one that are going to get it. It's at 0.015% of the population in China, in Italy, and also up in Washington State, New York, where it's the worst.
Right.
Less than 1% of the population has it.
Right. But let's talk about Hunan or Wuhan, wherever it started. They call it the alleged epicenter of COVID-19. Yeah. There's no new cases that were reported today.
Right. So I think they're on the back end of it. So when you look at it, and then if you look at Italy, there's some more data that's come out about the actual people who have died.
Yeah.
Over 48% of the population in Italy that have died had over 3 other types of sicknesses.
Well, let's talk about this too.
And it's in the elderly population.
Let's take this into consideration. Let's talk about the culture of people, right? The Asian culture typically does not touch. They bow. They don't shake hands because they respect each other's boundaries, right? A lot of people, the population density is significantly higher, right? You go to Italy, you go to France, or you come down here to Acadiana, everybody's hanging out, everybody's kissing cheeks, everybody's shaking hands, everybody's high-fiving, a lot of touching going on. In that culture, in the Italian culture, everybody's kissing and hugging and hanging out, staying up too late to drink more wine. There's got to be a part in there, right? So, I mean, there's got to be a part of it.
I think you're right. I mean, culture has a big part of it, but overall, and I don't want to downplay the deaths that they had in China or Italy or anywhere else. But when you look at it compared to the death rate in the United States this year alone for the flu, even though the flu isn't as deadly, more people get the flu. So 9% of our population in the United States has had the flu this year.
Right.
And 12,000 people died between October and February.
Right.
China, which was the worst case, if you believe their numbers, they're at just about 8,000 deaths right now today.
Gotcha.
And they have 1.4 billion people. So, I think there is a disconnect. Now, I also think there's information that we don't know.
Agreed.
I don't see the measures that they have taken are in the same. It's hard to understand why they would have taken the measure they've taken for this type of virus based on the information that we have.
Right.
So I wouldn't be surprised. Obviously, we know the more tests you take, the more that's going to come back positive.
Yep.
But it's surprising to me the measures that the government and we have taken to prevent or try to slow down this virus.
Yeah.
Based on the information that we've seen in other viruses, like the flu, like the swine flu back in 2011, I think it was, right around, or 2010. I can't remember when it was, but. But
it made the mosquito trucks start going around. Nobody was under quarantine.
Yeah. I mean, there's a lot of other viruses that have come through that seem to have been a lot worse by numbers.
Right.
So it's interesting to see. It will be interesting to see what happens. But I think it's important that people can still take advantage of the economic downturn, because that's the reason they actually lower the interest rates, to help people take advantage of it.
Stimulate it all.
I think ultimately,
and take advantage of it too. If somebody has enough savings that now's the time to put it in the stock market on this bear market. If you're sitting on a stockpile of cash, or you moved it from something and cashed out, talk to your financial advisor. Yeah. Put it into something else. One of the things that I am excited about, and I was telling my wife about this, because my wife tends to jump into oh my God, what's going on? I'm freaking out right now. So the thing that I love about it is that we're running into a situation, because I'm not going to say I'm a prepper, but I do like to somewhat be prepared mentally and grocery wise, I guess. Down here in South Louisiana, we're used to hurricanes. Mm-hmm. So what's the panic for down here, guys? This is just a hurricane that's going to give you the sniffles and make you feel like crap, right? It's not going to break your house. It's not going to shut the electricity off. But I'm glad that the government's stepping in and doing this for something that's significantly more mild than something that can really, really harm us, right? So cool. We got to go in quarantine. Now we're kind of prepared in our generation. We've got hopefully another 70 years on this earth that we're going to make it. And if something like this happens where it's real bad, where it's actually affecting healthy people, cool. Now we know what to do. We have an idea. Hey, y'all remember that COVID-19 scare? Let's hurry up and lock up at home again,
Yeah. So. No, I mean, I understand that, but I hope this ends real quick, because there's going to be people who are suffering that are in the non-essential business sector. Yeah. And I don't know how I can't fathom how we're going to get through this if we don't get back to work April 13th.
But think about this too, Jim. Everybody's always going to figure out something else to do. Let's go back to the first big decline in the oil field. All of those guys got out, right? There was a panic for a little while. There was a lot of landscapers that popped up, a lot of other small businesses that popped up, and those guys got back to work because they're workhorses, man. They know what to do. Everybody else, same thing. I was thinking to myself,
we're going to make it through this.
We absolutely are. The only thing that I kept thinking was, waiters and waitresses. That sucks, man. That sucks that these restaurants are getting closed down. But you know what else is coming up? All of the not drive-through, but all the delivery, the home deliveries, because they can still sell food. Cool. Go jump on working with waiter. There's a couple of different things that are out there that are going to be picking up because something else has fallen off. You need to be on the front end of it and really take advantage of it.
Yeah, I think you're right. I think we're really going to see how people deal with this, and either they complain and don't get over it, or there's going to be people who actually look at it as the glass half full.
Well, for the majority, we're going to hear the people that are victims.
Yeah.
We're not going to hear about the people that are going to say, all right, cool, it is what it is. Let me move on to something else and be proactive. Yeah. So,
dude, thank you so much for
being
here.
Man.
Appreciate it.
All right.
And we'll catch you next time.
Everybody give us a call. Guys. See y'all later.